Thank you so much, Phillip, Aubrey, the millionaire next door, for jumping onto this conversation with the over the top community and just letting us know what the heck has been going on with the stock market. As some of you might know, we have an over the top community group that is currently investing together into the market just to be accountable to one another, building up our bags, for lack of better terms. So today, what we'll specifically talk about is just a general update of how the OTT group is doing so far, going into month 3 of this investment challenge. Just get an understanding of why the market's doing what it's doing, and then probably just open it up to some Q&A. So with that, pass it over to you, Phillip. Talk to us a little bit about how the over the top community is doing. 3 months in, give us a little update. Where are we at? How's it?
Absolutely. And start off with saying appreciate you for having me here. As for the group, you guys are doing a really good job. You guys pretty much just crossed the threshold of having invested over $1,200 amongst the group. It looks like the most popular investment for you guys is the S&P 500, which has also turned out to be a relatively good investment. While we're seeing companies being slashed 70-80%, you guys' portfolio is up roughly 4% in a market where other people are in the red. So overall, it looks like exactly the sort of results that you guys were looking for, which is the accountability, sticking to a plan, and above all else, a portfolio that is in the green while other people are scrambling for a negative portfolio. So overall, you guys are doing very well. And and that's only been 3 months. So very well.
Wow. Yeah. Well, 3 months, we're building up, and you said 4% green rather than the red that we're likely seeing in any, individual stock that you might be getting invested in.
Yeah, and I think that kind of goes back to the benefit of kind of starting out with diversified portfolios, aka ETFs. Your top investment is the S&P 500, so you guys are essentially purchasing regularly the top 500 companies in the United States. So it turns out to have been a good decision so far.
Love that, man. It's only been a quarter, which is crazy.
Yeah.
So talk to us a little bit about why we're in the green with something like this. Is it just a general market overall is doing green, or are there just because the news has been talking about all the bad stuff happening? So how the heck are we in the green from these investments so far?
So I would say in the broader market right now, we are seeing a lot of tech companies and regional banks get slashed regularly. However, the reason why you guys are actually in the green is because you guys are indexing for the top 500 companies in the United States. So that includes the Apples, the Facebooks of the world, who is up roughly 98% since top of the year. In addition to that, you guys are also not only investing in tech companies, but getting a diversified portfolio of companies similar to, as an example, Johnson & Johnson, some of the oil companies, and so forth and so forth. So I would say because you guys did not over-index in tech, you guys have some pretty broad exposure. So it counterbalances out to the positive, to where there are obviously some negative companies in the broader top 500. However, you guys are well diversified, and it's kind of turning out very well. So yeah, and I will say that is also not the case for the larger market. A lot of investors, especially over the past decade, have over-indexed on growth stocks, which is synonymous with tech stocks. And those companies are seeing across the board 70-80% reductions in their prices. So had you guys followed what the market was doing, which was jumping into an aggressive amount of tech stocks, your portfolio would be in the negative 70-80% as well. However, sticking to the top 500, you aren't really exposed to that. So the portfolio really balances itself out. So man, really good position in full transparency. Really great place to be right now. There are companies we're seeing 70-80% slashed off.
Wow. No, I got a quick follow-up question to that, just because I feel like, at times like this, especially with people losing jobs, the market's ridiculous right now with people getting laid off. More people are going to want to hold on to the cash that they have rather than invest it into the market, especially with like all these specific stocks that you just mentioned that are just getting slashed. So just kind of any words of wisdom, I guess, to that mindset of, hey, like, should I just hold on to my cash right now?
Yeah.
And because you've spoken to this a lot, but I'm just curious, let's just like do a reset, given today's market. What do you think?
That's a really good question. I will start out with saying that is very dependent on your strategy. If your goal is to go out and pick individual stocks to invest in, absolutely, you want to hold on to cash, because what you're trying to wait for is a better valuation for these companies so that you can then go out and buy more. However, if you are an index investor, aka which is what you guys are doing right now, you want to stick to a simple DCA strategy. The reason being is just that the math always shakes out that as the market goes down and you guys are continuing to invest, you guys are getting a better average price. So that's just dollar cost averaging. And during a recession, which is what we're about to see, dollar cost averaging is one of the most powerful strategies an investor can have. However, if you are, again, like comfortable analyzing individual stocks, picking those out of the 5,000 companies out there and then putting a large bet on one single company, then that's where you would want to save your cash. But during markets like this, the easy strategy is to keep going with the DCA and invest in broad ETFs, broad index ETFs, aka the S&P 500. So to answer that question, I know it's a bit nuanced, but it really depends on what your strategy is. And you guys' strategy so far has been buying the entire market.
All right, I got the last bit. My computer and I just did something, but thank you for that feedback on that question, Phillip. Would love to just kind of get a general sense now, just going into kind of why the market's doing what it's doing. You mentioned a little bit about the slashing. What other factors kind of brought into it? Because I've heard a lot of things on the news about banks failing and people can't, potentially not getting paychecks for a little bit, and then they got bailed out, and so what's actually going on in the market? Top two things you would say are really impacting.
Absolutely. Inflation. I'm actually going to have to expand it to top three things. Top three things: inflation, our debt ceiling, and our regional banks being crushed. Those kind of has the United States being hit from all sides. Inflation at a higher level is just the cost of everything is skyrocketing. Our debt ceiling is, as Americans, we have loaned out or accepted quite a bit of loans, and now it's time to pay those loans back. And then the regional banks account for a large majority of the cash that people have in their bank accounts, and all of those companies, or quite a few of those companies, are collapsing. So we're kind of being hit from all three sides, but specifically all three sides regarding finances, aka inflation, debt ceiling, and regional banks. So that's kind of like a high level summary of what's going on in the market. Yeah, I guess I can dive into any one of those, but I can nerd out over this. So you might want to kind of give me a little guidance there.
No, that's great. And I think what most, or at least I'm thinking right now, you mentioned things like debt ceiling, inflation. None of that's got really anything to do with me, right? Like, I'm not inflating the market. I'm not, let's say I don't have any debt, but like just in general, what you're saying is like when the market is happening in this way, you kind of got to be, I don't know, I guess water in this situation, and just understand and recognize that it may not be in your control, but we have
I think that is I think that is the perfect way to think about it. Like the news right now, you would assume that it is time to bunker down and go underground or whatnot. But a lot of these things are out of our individual control. Individuals do not have control over inflation. The government controls that along with businesses. We damn sure do not have control over our debt ceiling. That is something that our politicians have to decide on. And we also do not generally have control over our regional banks. So all of these things that are hitting us right now are really top-down sort of things that we just have to be very fluid about. You want to kind of stick to a simple strategy that you can kind of turn on autopilot, but there's nothing that we can really do right now with everything going on. So for all intents and purposes, I like to stay up to date, but I don't allow it to impact my day-to-day actions.
Dope, man. Well, great. I think that is a solid update. I'm gonna give you one soundbite here. If you were to give us one tip on investing in the stock market, given all of these layoffs, failing banks, what's the one thing that you would just say? Like, you would just give us a phrase to just live by for the next, let's call it 3 months.
3 months. Same as what I said last time, which is stick to broad market ETFs. You are making a bet on a basket of assets versus an individual assets. And seeing one stock go down 80% overnight is gut-wrenching. So I would stay away from individual stocks and continue going with purchasing broad market ETFs. Absolutely.
Amazing, amazing. All right. And then one question that came up, I got a notification about dividends given the S&P 500. Now,
Yep.
some of us were new when you first brought this up, but end of quarter, dividends were sent out. It might not have been a big check, especially if you're just getting started. But what was that? Give us a little insight as to what the heck did we just get? You got 4%, but then there's this dividends thing.
Yeah, so being that you guys all hold the S&P 500 through VOO, VOO pays out a dividend, I think just shy of 2% every quarter or every year. And that simply means they're giving you a 2% cash bonus simply for holding the asset. And that's where we get to the point of people building out passive income, to where when you have so much in the market, 2% will actually start to mean more and more over a long period of time. So essentially, it's just them giving you back free money that you automatically reinvest. So yeah, it's free money for being an owner, essentially.
You love free money.
Yeah.
Dope, Phillip. So I'm just going to summarize what you said. We're a quarter in, $1,200 within the OTT group has been invested into S&P 500. We've already seen 4% green, meaning 4% increase in this portfolio over the last 3 months. And this is only going to continue to build as we're over time, dollar cost averaging in. Despite the ups and downs, we're kind of still historically looking about right for that path of staying in the long-term green. Is that fair to say?
Yeah, I would say that is absolutely fair to say.
Cool. Well, great. Cool. Phillip, anything else you want to just speak to for us before we just kind of close this recording out?
Stay focused on the long term. It is very daunting to kind of look at the news every morning and see something negative. So keep in mind that the market goes in cycles. There will always be ups and downs, but your job is to focus on the next 5-10 years. Do not try to over-index for what happens in the next 2-3 months.
Let's get it. All right. Thanks, Phillip. And we will be tuning in within the next month's time and figure out where the heck we're at.